Good morning, good afternoon, good evening, everybody. Sorry I'm a little bit tardy here. Not that bad. Not that bad. I usually try to get in here between 1 p.m. Eastern and 1:10 p.m. Eastern. I think I've hit that target. But I was spending a little bit of time, extra time with the equity traders going over the two crucial statistics, the batting average and the reward versus risk ratio. So um, so I just wanted to see it through fruition there. And some of you were there. Some of you were there enjoying the discussion. So let's do this while I readjust the projector. Let me know if you have any comments, any questions, any actual trades. Comments, questions, trades. Then we will go over the overall market stuff. We will do follow-up from last week. We had several open items from last week. And we'll see if we could even squeeze in an educational topic or something by the end of the hour. So just give me a moment to readjust the projector. Okay, Nays, feel free to post your question. Um, I will come back to it when I see it more fully posted. I think I have an idea of what the question is. So a little later on, if you want me to take a stab at it, I will, or if you want to just elaborate a little bit more. It is an important question. From what I think you're asking, it is an important question for a swing trader. So, Cal, Stephen, Perry, Mays, Marcus, Kimberly, Jack, Henry, Garnett, Delroy, Christopher, Brian, and Brian. Betty, I used to say Betty and Betty. Now it's Brian and Brian. Brian and Brian, Betty and Audrey, it's great to see you. Some newer names, some people who've been here forever like me. Okay, Nays, I'll try to take a guess at what you're asking in a little while. But I'm going to hold off because I do want to get to the general markets first. So I'm going to do it in this order, everybody. A little bit of general market review, because once again, since we last met, we had the same instance that we've seen probably, I don't know, 20 times. 20 is probably an exaggeration. 8 times, 12 times in the past year or 2 years. And we went through it again over the last couple of days. So I do want to point that out in the general market again. And then I will take questions. Nays is the first and only question. And then I'll get to, it looks like I have about 5 follow-up items from last week. Actual trades that we developed in the room. Actual trades that some of you were doing and were sharing. Actual trade ideas, information that some of you were doing and sharing. So let's take a look at the general market. Oh, I'm sorry. I thought I had the projector on already. It must have turned on and off. Yes, it did. Darn it. I just need a moment. It's going to take a couple of attempts to readjust it again. I thought I was beyond this. Let's see if I can get it in one shot rather than 2 or 3. Okay, we're going to go to the S&P 500. Garnett, why do I have no idea at all what you're talking about? Why do I have no idea at all what you're talking about? Just think for a moment on that. So here's the general market, and we use the SPY, the SPY for the general market. That's the ETF that tracks the IFT. You got it, Garnett. You passed the quiz with flying colors. So just let me know what time frame you're talking about. We'll definitely take a look at it. Right now we're on the daily. Right now we're on the daily. And can anybody tell me what I was referring to before when I was saying the same thing happened the last couple of days that has happened probably a dozen times in the last 2 years? And it's something that some of you have been focused on and feeling like it was going to be the end of the world. Come on, somebody take a look at the chart. Not necessarily a gap down, Maze. Not necessarily a gap down, although it did occur. Right, not necessarily a drop, although that did occur. Come on, there's something. Ah, there we go. Well, Brian, you're the closest. It's not a break of the 20, but the 20 was threatened again. The 20 was threatened, right? This is not a break. This is not a break. You you understand that, right, Brian? Just quickly, yes or no. Okay, good. You said right. So, what we mentioned since COVID, since the advent of COVID, or after the first, let's say, 6 to 8 weeks of COVID, every time the 20 was threatened, and a couple of times it did officially break, right? Right there, that's a break. But every time it's been threatened with a pullback or a break, it never had follow through. And once again, I had some of you in this program emailing me saying, this is finally it. And it's like, I don't know, we'll see. I'm not going to be the one that tries to be clairvoyant and predict it. I'm not going to be the one who says that this pattern of coming back into the 20 is finally going to, and then taking off again to all-time new highs. I'm not going to be the one who tries to predict the end of that. I'm just going to go with what is until it is no longer. So for the past year, and some people would say it's really been the past 10 years, right? In the equities room, Dan did a beautiful discussion of this. Let's see if I have enough data on my charts. Yes. Think about this. This pattern has really been almost the past 12 years. There's a whole generation of traders that have never really experienced a bear market. Take a look at this one here, the great financial catastrophe of 2008, 2009. That looks like a blip now, but that is truly when it felt like the world was ending. Everything else since then, whenever we've come back into the 20, even if we've had a minor break, well, I don't see any. There are no minor breaks on the month, and this is the monthly chart. No breaks since the great financial crisis of 2008, 2009. Now, somebody might say, didn't that go so deep here that that was a break? Yes, I'd agree with that. But it immediately snapped right back to it. So eventually this is going to give out. Currently it is not. The longer it goes on, the high based here, let's give you a little quiz. Based on what market law is this statement correct? The longer it goes on, the higher the probability increases that this will eventually give out. Which market law would be the best one? There you go. Garnett has it, right? Your average trend has 3 to 5 to 8 moves. Now look at this since the last time in 2020 when the 20 moving average was threatened. Look how much more sharper, almost parabolic we've gone. This is starting to look like, and I'm going to write the word potential, exhaustion forming, right? When you have ignition like that in the beginning of a trend, when you have a move like that, almost parabolic in the beginning of a trend, that's ignition. But after a long trend like this, could we maybe start exhausting? Yep, but it's not exhausting yet. Just because some things are lining up in that direction doesn't mean it's over yet. And once again, let me get back down to the daily chart, from the monthly chart to the daily chart. So far, the daily chart since last October, every time we've come into the 20, we've ended up then going up and making new highs again. Will we make all-time new highs? I don't know. But right now, here's the question. What IFT strategy triggered? And it may be the IFT strategy that Garnett did. Although, Garnett, you still didn't tell me the time frame that you traded, right? I don't see it. You told me a couple of moving averages. Oh, okay, got it. Got it. Garnett, you could use whatever moving averages you want to. You could use whatever moving averages you want to. My recommendation, and you probably have heard me say this before, always have a fast, a medium, and a slow. So if you want to do something like the 50, the 100, and 200, that's fine. Yeah, there's one thing, Garnett. People always say, oh, Oliver mentioned, this or that or the other thing. You always have to have in context of what he was talking about. Was he talking about, trade the open like the boss and very fast off the 2 minute? Was he doing a swing trading presentation? So once again, though, the main thing I want to get across is fast, medium, and slow. Always work with those three. So if you want to set up your charts more like an institution that's thinking out weeks and months and years, there's no problem using the 50, the 100, and the 200. If you want to, be more of the plain old vanilla IFT style using the Fibonacci, the 20, the 8, 20, and 200. If you want to throw the 50 on there too, go right ahead. The 50 and the 20 kind of are doing the same thing. Yeah, it doesn't really matter, Garnett. It really doesn't matter. It's more so, my answer to your question is absolutely. If you want to delete the 20 and throw the 50, see how that works for you, fine. You're still using a fast, a medium, and a slow. If you want to put four moving averages, the 8, 20, and 200, sure, go right ahead. If you want to set up like an institution and do the 50, the 100, and 200, but again, that's for much further time horizons, not time frames, time horizons, right? Institutions quite often use the 50, the 100, and 200, but they're looking out weeks, months, and years, not just hours, days, and weeks. So that's all fine. So Garnett, do you want to give us any more information? You don't have to, but there's 6 items in order to describe a trade. Number 1, what is the symbol? You told us the SPY. Number 2, what is the bias? You already told us long. Number 3, what is the trading time frame? You told us the daily. Number 4, what is the IFT strategy? Well, you said you did a bounce off the 50, and that's fine, but everybody, what IFT strategy just triggered here on the chart today? There you go. Okay. All right. What's the last two things? The entry and the stop. Let us know if you want to, the entry and the stop. Yeah, but you still have to use the risk unit and everything. Okay. All right. Uh, and at what price was it at when you entered? What price was it at when you entered? I do understand what you're saying about here. I'll tell you what. I'll tell you what. Rather than have don't go crazy. Rather than have let's just take a look how. Let's just watch how this VBS performs right here, right on this chart. Roughly we'll be talking about your trade. So right, that would be the VBS right there. Entry when the subsequent bar takes out a prior bar at or near the location of the 20, and you said the stop was under the red bar. So that's it. We'll track this and see how it goes. We'll track this and see how it goes. And I think, didn't we have, oh yes, we have another trade going on this also, which would be over now. Give me a moment. I'm not going to redraw the lines. All right, so we'll tighten up that stop a little bit. Entry would have been here, and you decided to use 2/3 of the bar rather than the full bar. Thank you for that update. So here, we had tried that VBS here, and there was also somebody that worked that RBI there. So if you look at those, all winning trades, all of them break even or better winners. I forgot about the RBI that somebody put into the room last week. Again, the RBI was this one right here. Very narrow range. Stop underneath, entry there, up 1R, up 2Rs, go home with money. Boom, hold back. Another VBS that would have won. And now a VBS that Garnett is in. So when we do these reviews, I mean, there's trade ideas galore. Those of you who asked about, trade ideas, I don't know how much more you really want to be spoon-fed this. Now, we did say, at some point this year, I look to get um, the Twitter feed going again, where maybe we'll repeat some of this. But once again, thanks to these reviews of the general market, reviews of the industries, reviews of the sectors, reviews of the ETFs, reviews of individual stocks, the trade ideas are almost infinite in this room. Excellent, Kimberly. Excellent. You said you're very new. When did you join? Or you said you're new? Welcome. It's great to have you here. A little round of applause for you. Great to have you here. That really is very new. Sometimes people say new and they had stepped away for a year or something like that, but that definitely is new. Round of applause for our new member, Kimberly. All right, let's get over to let's get over to, I always like to also, when I do the general market, now again, the S&P 500, and we use the SPY ETF, that's the overall general market. It represents the composite of the 500 top stocks in the U.S. Equities market. But the leading sector is technology. It's been that way for quite a while. So we always like to take a look at the QQQs also, the triple Qs, to give us a feeling what the NASDAQ 100 is doing. Now, way back here, you may remember, as the S&P 500 was making new highs, the tech sector was lingering a bit. The tech sector was lingering a bit, which is a bit difficult. If the leading sector is not advancing, how do we expect the rest of the market to keep advancing? But fortunately, the tech sector got out of its slump and is on that beautiful trajectory up again. Once again, here's a VBS here that's just triggering. Here's a VBS here that's just triggering. Another thing, this is $325 a share. Don't forget you also have the T triple Q, which is basically mirrors the QQQ, another ETF, but that's in the $120 price range. So that's the overall market, taking a look at the S&P 500 on the daily via the SPYs, and taking a look at the NASDAQ 100 via the triple Qs and the TQQQ. Oh, yes. How I forget. I'm glad I kept notes from the last couple of times. Don't forget, open trades from this room also. There's people in this room that did these RBIs. There's people in this room that did other entries like VBSs along the way. So we have people in this room just working this trend all the way up. I bet you the beginning of the week shook some people out of their trades or trailed them out of the trades, right? You definitely had a break of the 8. But if you were in down here and we're holding for a break of the 20, you're still in. You're still in. All right. Let's take a look at your trade. Let's take a look at your next trade, Garnett. Thank you for sharing it. Let me go find Lyft. Give me a moment to grab the simple. Okay. I like the way you qualified that. I like the way you qualified that, and I'll explain what I mean in a moment. Let's see if we have all 6 items, which I believe we do. This is Lyft on the daily. So we have item number 1, the symbol. Item number 2, the time frame. You said it was a long, so we know the bias. That's the 3rd item. You gave us an entry in the stop. That's the 4th and 5th item. And the 6th item, you said it was a VBS using the 200. So once again, an IFT concept, but you posted that really well, Garnett. Thank you. Because if you just said VBS, my first question would be, and let me ask the room anyway, why would this not be a VBS? Can anybody tell me why would this not be a VBS, a standard VBS? There you go. You do not have a rising 20. The 20 was broken. Very well stated, Nays. Very well stated, Brian. So if you see what Garnett is doing, there's no reason using the IFT concepts in other ways as long as you explain it to everybody else so we know what we're looking at. So Garnett sees this price action going sideways, but realizes that the 200 is rising, and every time price action comes back into the 200 seems to be holding. So he's doing a VBS type of trade, except using the 200 rather than using the 20. And very well explained into the room. So let's see. You said the entry was, let me scroll back to it, 52.18. Wow, Garnett, you have a really strong winner here, right? Think about this. Oh, darn it, I spoke too soon. I should have quizzed all of you a little bit more. But we'll walk through it. Let me just see. So Garnett's entry is, well, when you say under, I'll tell you what, I'll use the whole number and the 200, because I don't know where you mean under the 200, right? There's a lot of area under this 200, but it's something like the entry is the green line and the stop is the red line. So here's my question for everybody. Garnett entered slightly above the 200 at 52.18, and I put the stop slightly below the 200 at the 50.00 fulcrum. Looking at this chart from an IFT perspective, what should Garnett's worst case scenario be right now? What should Garnett's worst case outcome be in this trade right now? Ah, only Garnett is correct, right? Look at it visually. Look at it visually. Only Garnett is correct. Once up 1R, don't lose money. Once up 2Rs, go home with money. Garnett is up at least 3 risk units. Garnett is up at least 3 risk units. He should be strategizing how he's locking in his profit. Here's what he should really be doing: trailing, right? He should be strategizing how much profit he's going to protect while nurturing the winner to keep running. And I don't care whether you're using the ETF directly or you're using options. You should definitely be in a phase now where you're going home with money no matter what. So very well done, right? The 4 rules / 5 rules of risk management. Rule number 1, never lose more than 1 risk unit in a trade, even if you're using options. Rule number 2, never add to a losing trade, even if you're using options. Rule number 3, you're welcome, Garnett. Rule number 3, once up 1R, don't lose money. That would be the bottom yellow line. Next rule, once up 2Rs, make sure you go home with money. That would be the middle yellow line. And then if you want to practice trail methods, like bar by bar, break of the 8, break of the 20, break of the prior pivot, break of a support area. Garnett, don't tell me all this time that I'm wrong, right? Didn't we? No. Garnett, male or female, Garnett, right? Yeah, I think wasn't it Dan that went through with you in the equities room? Yes, which is fine. That was very, very polite of Maze, because in the equities room, this was just 2 days ago. Pravina, after about 2 weeks, finally said, I'm a man, not a woman. And I was just going in my mind, since we have such a huge Spanish speaking contingency in the equities room, I was thinking, oh, a name that might end in O is male, and a name that ends in A is female. And Pravina finally, stepped up and straightened me out with that. So that was very kind of you, Nays, to check. So now, well, that's basically it. We're at this point, and I'm putting this down as yet another trade to track. Let me just make a note. I probably will not remember this one. I do not look at Lyft very often. And Garnett, once again, I like how you are maturing with the IFT concepts, and your mind's eye caught the fact that, all right, the 20 is useless to me right now, but that 200 is holding nice and strong. What could I do with that? All right, I just made a couple of notes on it, so we make sure we come back to it in future weeks. Excellent, Garnett. I'm glad this is of service to you. It's good to have you here. All right, we looked at Garnett's trade. We looked at the SPY as a general market. We looked at the QQQ as the number one sector of the general market. I have three other notes here. Let me start with the industries and the sectors first. Somebody had something on the XLE. That's the energy ETF. Let's take a look at that real fast. Now, I am not recording whose trades belong to whom. So, if people want to step up at any time, feel free to. Let's see, where are we? Why am I having a little chart problem here? Oh, yes, this was it. Oh, wow, this worked quite well. This worked quite well. Here's how the person interpreted it. It just came back to me. It was an uptrend. Then price action started going sideways a little bit, right? This person saw equal lows, equal highs, and then finally a confirmation move. First, new lower low and new lower high. So they tried the VSS. They tried the VSS. So it would have been like the second move in the new fresh downtrend. The one word of caution was please have your reward versus your risk measured at least with the 200 in mind, because there will be a battle with the rising 200 at some point if the trade worked out. So this was the person's trade. Entry short there, and the stop was right over the setup, according to my notes. Here we go again. It gets boring after a while, right? You will definitely have your losing trades, but it sort of gets boring after a while. Once up 1 hour, don't lose money. Once up 2 hours, go home with money. 3 hours, 4 hours, 5 hours. I don't know. If you did a bar by bar trail alone, that would have been a 4 hour trade. If you decided to hang on and see if it triggered again off of the declining 8 and 20, that's fine, but I would not go red. I would definitely have a 1 or 2 hour lock on the whole back half of the trade or something like that. So that's another one I'll keep on the roster. We'll see whether it triggers again or whether this is pretty much over. So that was another one. Let's see. The travel industry, the airline industry, JETS. That was another one brought to our attention. So far, everything is on the daily time frame. Everything that I'm going over so far today is the daily time frame. So what was this? Oh, this was not actually a trade. This was not a trade. This was something we were going to come back and observe what happened at the Battle of the 200. This was a VSS forming right on top of the 200. Would it break and have some follow through, or would the 200 hold and price action go back up? Well, it definitely had some follow through, right? I would have not taken this because it was right in the face of the 200. But if you entered short there, put the stop there. Once up 1 hour, don't lose money. Once up 2 hours, go home with money. 3 hours, 4 hours, and then you trail out as it retraces back. Possibly, you know what? Here's a trade idea. As long as the price action stays under the 200, as long as the price action stays under the 200, you have a declining 20 coming down, maybe another opportunity for VSS. That's definitely going to be on my watch list. That definitely is going to be on my watch list. If we could possibly get a nice narrow range trigger off of the declining 820 and 200, that would be worth a shot to me. My only problem with taking trades off the 200 has such a strong gravitational pull that I really want to be, like Garnett's trade and this other trade, I want to be up multiple risk units pretty fast, right? Because the tendency to sort of stick around the 200 or snap back to the 200 is pretty strong. So let's see, what else do we have? I felt like there was one more. Oh yes, there is one more. Like I said, these are all the trade ideas shared amongst each other here in this room from just last week, with Garnett's trade on Lyft being a new one in the mix, and his trade on the SPY too. We did the former RBI, but now Garnett was doing the BBS, the current BBS. So this is ARK, the famous hedge fund manager Kathy Woods. This is her main her main I guess fund, right? It tracks her fund. So let's see, what was the trade idea on this one? Let me make sure. I do not have the right symbol. Bear with me, bear with me. This was trying the VBS off of the 200 and the newly rising 20 also. This did not work. This would have been a stop out. Stop was under the setup and under the 200. This would have been a stop out during the pullback over the last few days. All right. I felt like there was something else I wanted to go over with everybody. I'm just curious. Let's take a look at the financials. The FAS representing the financials. This is more curiosity on my part. Yeah, we had this very powerful uptrend. Not the smoothest 8 and 20, but I like that 45-degree angle, that 45-degree angle overall. And this is the FAS that represents the financial services industry, including banks and brokerages and all that. And then we had bearish elephant ignition. We had our pullback. We had our first lower low and lower high. And now that's taken out. I'm going to watch this one too for a possible VSS. So there's another trade idea that's going on my list. There's another one that's going on my list. And let me make a note for the room too, so that we come back to this next week. So that's the FAS, daily time frame, possible VSS. Okay. No entry or stop yet because it has not triggered. What exactly, Garnett? At least let me know whether you're looking bullishly or bearishly. And this will probably be the last thing we cover today, unless there's any other questions. Let me know whether you're looking bullishly or bearishly. Okay, long. All right. DP on the daily. All right, well, you kind of have that emotion already, right? You've already started bouncing off the 200. My concern on this one, it's not a concern. It's what team is going to win. This has started a new downtrend, right? You had equal highs and equal lows. Now here's your first lower low, your first lower high, and that's taken out. And the 8 and 20 are definitely coming down on a nice strong angle. And you have the 200. And you've already had a little bit of a bounce. So right here, right now, where we're at, right here, right now, I'm not trying to discourage you from taking the trade long. I'm just saying you're hitting a precipice here. Do we continue pulling back into the declining 20 and maybe further? Or somewhere along the line, does the VSS trigger and we continue downwards? Once again, nothing ever is 100%, one or the other. This is, these wonderful battles on the charts and the market is what it's all about. Right. So your resistance is going to be the declining 8 and 20, and your support is going to be the 200. Which one this time around wins the battle is to be seen. So let me jot this one down too. We'll see who wins the battle here. I love when the list of trade ideas starts getting really long. Trades that we are tracking in trade ideas. Oh, yeah, if you're in already, this would be a break even. I mean, again, I don't know exactly your entry and exactly your stop, but let's just say now do think about this. I don't think Dan would have done this. You mentioned Dan because there was an official break of the 20, right? But let's say you're in here. Let me use a green line to represent the long, right? Let's say you just got in today where you said, all right, it's bouncing. I'm taking this one. And you put your stop right under the 200. Let's say right under here. And I'll use a yellow line. You've reached the height of about plus 5 Rs. Dan would not take a complete loser on this. Dan would not take a complete loss on this. His loss would at least be cut in half somehow already. Right? You are right in the face of the 8, right? Like I pointed out before. So for this to work, you need to have a pullback all the way to the 20. That's why I described the battle of the declining 8 and 20 versus the 200. All right, everybody. Believe it or not, we went over about 10 trades. We went over about 10 trades plus the overview of the general market and the overview of the cues. Nays, your question. I knew there was something lingering in my head. Your question, I promised we would get back to it towards the end, and I almost forgot. So your question was about using stops swing trading. And I said that I probably do not, I do not fully understand your question, so I'm kind of guessing at it. Let me ask you a couple of questions. Are we talking about equities or Forex or both? Are we talking about equities, Forex, or both? Okay, Nays, I thought your question was something different. Excuse me. I thought your question was something different. Let me address your question first. Could you find a support or resistance area on the 15-minute and use that as a place to place your stop, even if you took your trigger on the daily time frame? Sure, if that's what your trading checklist tells you to do. Now, some people may be thinking here, because they hear me a lot of times in the Forex and the equities room, that I say the most important time frame is the time frame you're trading. A lot of times when people say something like, let's say they're trading the 5 minute in equities, and they say, somebody in the room says, but this is happening on the daily, and I say, let's just calm down. Let's just focus on the time frame we're trading. But that's in an environment where things are a lot faster, right? You're in trades for minutes, maybe a half hour if you're lucky, or every once in a while for a couple of hours if you're really lucky and the trade really is a big winner. So that's kind of a different environment. In swing trading and in wealth trading, we have a lot more time to sort of formulate. If we turned around and looked at the other time frames and said, hey, I love this VBS on the daily, but I'm going to use a real tight stop and I'm going to use Haas on the 15-minute. Sure, you could do that. Haas is the 200 on the 15-minute if you don't understand that silly little IFT terminology. You could do that, and there's plenty of time to scope things out. But always remember, the most important time frame is the time frame you're trading, right? So right here, let's see, let's pick something else than this. Let's go back to the S&P 500 or the QQQ. Let's go back to the QQQ. Let's see if there is something of interest somewhere else. On this one, if I did the VBS that Garnett is doing, I would just stay with this time frame. I mean, look at that beautiful tight stop. Stop would be there. Entry would be there. Oh my goodness. I really don't have to go to any other time frame, but let's see what just for fun, let's see what the 1 hour and the 15-minute look like. 1 hour, let me erase the lines. Yeah, I'm not crazy about these 1 hour time charts on the Sterling products. I can't wait till the upgrade and the fix gets done. So let me drop down to the 15-minute. Yeah, there's really nothing here of interest to me. Maybe if I really wanted to tighten up the stop, I would go to this area of the equal lows. I bet you that lines up pretty closely to, let's see, 358.50. Can we go back up to the daily? Yep. Well, oh no, I take that back. That would be a much tighter stop. That would be a much tighter stop. So I know this, this is the type of thing you have to get good at when you go back and forth. But let's, I wouldn't do it this way. But let's say you took that VBS right there. Okay, the stop was at approximately 350, 250. Now a couple of days later, it's working for you. It's working for you, and you say, you know what? It's time for me to make sure that I make some money on this. It's time for me to make sure I make some money on this. And I see it on the 15-minute, I'm forming this area of equal lows. And I say, you know what? I'm going to lock in profit and put my trail right under these equal lows on the 15-minute, locking in about $6 on the trade. So can you do things like that in swing trading? Absolutely. Oh, absolutely, Nays. This is urgent. What is Nays really asking for? Nays is saying, do we have a maximum loss per day or something similar in swing trading? What is the fundamental unit that Nays should really be thinking about, everybody? There you go. Absolutely. Risk unit, risk unit, risk unit, risk unit. So Nays, we're going to help you develop a risk unit right now. And we do it differently when you're trading your own money, right? The swing program, you trade your own money. And I don't care if you're like Garnett and you use options, you still need a risk unit, or if you're using the equities and the ETFs themselves. So Nays, here's how it works. It's actually a lot simpler calculation. It's a very simple calculation. Here, let me use the room. I do not want to put you on the spot where you're offering, insights in your own financial information. So we're going to do this as a group. This is just for an example, so Nays knows how to create a risk unit. So Nays, do you know what a risk unit is? Yes or no? Let's just start with that. Do you know what a risk unit is? Yes or no? Okay. From this day forward, there'll be no kind of. Which is fine, So I'm so glad you asked, because what you were about to learn right here is the most important thing you'll ever learn in your trading life. The most important thing. And here's what a risk unit is. And we'll end on this quick review and lesson of the risk unit. A risk unit is your maximum dollar loss per trade. And I usually put the word dollar in all caps. So that you're really focused on that. So so now you're trading your own money. How do you figure out what your risk unit is, which is your maximum dollar loss per trade? That will become the backbone of all of your trading. Well, it's a pretty straightforward approach. So here's what we're going to do, and everybody's going to participate in it for the example. This is totally anonymous. What would you like to use for our example account here to develop a risk unit? Would you like to use an account with a $10,000 deposit, a $25,000, a $50,000, a $100,000? And once again, you just scale this to yourself ultimately. Okay, 10,000 and 25,000 is a tie, so let's do 20,000. Let's do 20,000 just for the mathematical example. So Nays, are you still with me thus far? A risk unit is your maximum dollar loss per trade, and we're going to use a $20,000 account as an example. All right, I just need one more answer from the crowd. One more answer from the crowd. When you calculate your risk unit when you're trading your own money, you do it as a percentage of your principal. A percentage of your principal. So, of our $20,000 of mock pretend principal in our account, what would you like to use as a risk unit? Would you like to use 1/2 of 1%, 1%, 1.5%, 2%, 2.5, 3%? Okay. We have a mix of answers ranging from 1% to 2%. My first round of applause goes to everybody because nobody said anything higher than 2%. If you ask any successful long-term professional what the maximum risk unit should be in any case, they would say 2%, but probably less, to tell you the truth. That would be the response. 2% ultimate maximum, but you're probably better off in even using less. So all these answers are correct. 2.5%, 3%, if anybody chose that, that would be an incorrect answer. So it's kind of like split amongst the three, so we'll use 1.5%. So if I have a $20,000 account, and I want my risk unit to be 1.5% of that, my risk unit is $300. My maximum loss per trade is $300. I'm never allowed to lose more than $300. So, Nays, are you still with me? Are you still with me on all of this? All right, I'm going to show you one more thing which you probably know already, but what do you do now? What do you do if you want to take a trade? You know what your maximum loss per trade is. You know what your maximum loss per trade is $300, and now you're looking to take a trade. So let's say you want to take this VBS on the daily, right? You have an uptrend, you have a market law 3 pullback, you have a subsequent bar taking out a prior bar, so you want to go long right here, which is approximately 123, and you want to put your stop right under the setup, which is approximately 120. You're welcome, Maze. So now every trade you take has 3 parts to it. Part A is your risk unit, but that's no problem because it's always fixed, and in this case, it's always going to be $300. B, where am I going to put my stop on the very next trade? I'll just write, where is the stop? A support area for a long trade or a resistance area for a short trade. And then what that yields my position size. So watch the math. This is so simple. If I'm in at 123 and my stop is at 120, that means it's $3 of distance from my entry to my stop. If I have a $300 risk unit, I divide that by the distance to my stop, which is $3. I could do a maximum of 100 shares on that trade. My stop is at 120, my entry is 123, my risk unit's $300. I can do 100 shares, and if it comes down and hit $120, I am out for my maximum $300 loss. Does all of that make sense, Nays? Excellent. Thank you for asking the question. We can never review the risk unit too often. So, Tao, Stephen, Perry, Nays, Marcus, Kimberly, Jack, Henry, Barnett, Delroy, Christopher, Brian, Betty, and Audrey, have a great day. These hours go by so fast. I'm going to wrap up right now. If you arrived late and you would like a copy of the recording, I will post it in the room in about 2 minutes, and I'll leave the room open for another 2 minutes after that, so you have a minute or two to grab it. Other than that, same time on Wednesday next week. I look forward to it. Have a great day, everybody.